Well, good morning. I'm standing here wondering what's going on with the news and realized that it was 8 o'clock. Welcome to Risk Neutral Trading, my virtual trading journal. And happy Tuesday, the 2nd of September, after the long holiday weekend. First of all, this stream is not for financial or trade advice. Let me make sure that I've got everything happening over here. Yeah, there we go. Stream seems to be running. Okay, not for trade or financial advice. It is my virtual trading journal. What that means is, rather than, come on. Damn, my mouse and everything is having a problem here. Sorry about that. Rather than focus, I don't multitask well, so rather than focus, screen snap and type and all those kinds of things, I am better off to capture my video, my screens, and then my voice provides oversight or insight as to what I was thinking, I should say, and that gives me a great journal. It's unfortunately kind of long because I have a commitment not to take any trades off of the stream, and so the stream starts every morning at 8 o'clock with the pre-market here, and then lasts the entire cash session, which is until 1500 in the afternoon. I'm not monetized in any way, so your likes and subs are great, please, and contribute to the chat. It's a lonely business trading. What have we got going on here? I'm sort of behind the curve. It was a foggy weekend for me. I was busy trying to code up some backtesting stuff all weekend without much success, and it's pretty disappointing. The idea here, because it's my journal, right, is I share everything, stats and everything else. And if it helps someone else, great. But remember that you're listening to me talk to myself, so I'll be right back. Wow, okay. There's all kinds of all kinds of things breaking loose around here this morning. All right, so where was I? I hope I've sufficiently gone through the purpose of the stream, and let's get into the numbers here, which are the big point of the day. We're still in the throes of earnings somewhat, but let's take a look at our calendars here. This is the weekly calendar. So obviously yesterday was a holiday. At 8 o'clock, I'm sorry, at 8:45, we've got S&P PMI. And then at the top of the hour, we've got ISM Manufacturing PMI, Atlanta Fed, and of course, we've got the random risk here. Trump is going to be speaking at 1300. So they're actually now scheduling these, so that's a good thing. We've got JOLTS and FOMC stuff tomorrow in the beige book. Thursday, we've got a whole bunch of them, S&P, PMI, global, and Friday, we've got the non-farm payroll, which is the biggie of all time reports and numbers. So we've got 8:45 and 9 o'clock today. Keep your powder dry, would be my guess, my suggestion. U.S. pulls TSMC's waiver for China shipments of supplies. I'm not sure. This is the Taiwan semiconductor manufacturer. I don't know I guess we have now make rules for everybody in the world. I don't know. U.S. Here's where we are. Here's the Trump thing. Here's our 8:45. Excuse me. And then our manufacturing stuff at 9 o'clock. Yeah, this is a Financial Juice. This is also free. This is a free web service or news service. And this is my probably favorite one from the oldest times. And that's the going on here. I don't know what yesterday. There you go. This is filterable, and so is fine. And this is also free. This is investing.com. And this is Financial Juice, which has a similar schedule here, but then has more of a squawk box feel. And the fight heats up now with both sides here, which is just magic. All right, so let's get on to the pre-market, which is the big event of the day. Now, if you have been asleep or under a rock or something, we dropped 100 points or 80 points, almost 100 points now. Now, 90 points in 40 minutes on the ES, and I have been desperately searching for why that is. And I don't know. I don't take any trades off the stream, but I can tell you that I would have loved to have thrown a short on here and had my targets all hit and be done for the day. But that maybe I need to rethink this whole idea or start the stream earlier, or I don't know. I mean, this is a one-off day, right? So let's not get reactionary. All right, the first order of business is my charting package, and this is IRT. This is the ES, the NQ, the micro composite ES, which is a daily RTH session, and these are daily candlesticks. Wherever price overlaps, I draw a volume profile around them, and that gives me the high and low volume nodes, which are these red and green lines, and a micro composite VPOC. The red and green, the high and low volume nodes are pushed automatically to Bookmap. You can see where we closed on Friday, and you can see right here where we are trading now. This little guy right here, pretty pretty amazing. I mean, there's the overnight, so we're going to be definitely opening in a gap. Here's our Friday, our market profile, and we can do this to show you what has happened so far overnight and continues to happen. There's Friday, and there's today. Now, I've scrubbed the holiday, which was the shortened period yesterday morning from the, Sunday night and yesterday morning has been scrubbed here, but there you have that. And this is the settlement. We're down across the board, of course. Of course, we're down 1.1% change on ES. Excuse me. And the way these colors and everything are derived is the last. How does the last price relate to the settlement? So there you go. I also track these same numbers for the micros as well. These are the minis, and I push the session prices automatically to Bookmap. So here's Bookmap, the micro composite column, where I enter everything manually, and I didn't take these stale ones off because I was preoccupied all weekend. Here are the micro composite high and low volume nodes, the full session volume profile, previous RTH session volume profile, and my all important notes column where you can see the statistics and the notes from Friday. First thing I do is clear that. And then I change the title of this to the expected open type. And there's not a hell of a lot of doubt in anybody's mind what we're going to do today. And that's open lower out of range. There's only 4 open types. So there we are. And how do you determine that? Well, you determine that by where we will likely open, which is way down here, as it compares to the previous RTH close. And I don't even know whether I can get up there and show you that. Yeah. The previous RTH close, which is hiding up here somewhere under one of these. Let's see if we can find it over here. Well, trust me, it's above us. The previous RTH close and how it relates to the previous RTH range. Well, I can promise you without any question in my mind, we are lower out of range. So there you go. And that will dictate the statistics, which we apply and associate with the session prices, which are here from IRT. Now, there's nothing magical about any of this stuff. There is a RTH VPOC, volume point of control, and there's a full session volume point of control. They are only a marker of the price at which the most contracts have traded so far in the session, meaning that at 64.24 quarter, the most contracts have traded so far in the overnight. Right there. We have a volume, an IB high and low, which sometimes seem confusing. This is an old market profile acronym for initial balance. The IB high and low are nothing more than the marker of the high and the low of the first 1 hour of the RTH trading session, period. And everything else is just an abbreviation of the name: overnight low, overnight volume point of control, etc. And there's no indicators on my Bookmap or my IRT. There is the POCs, as I mentioned. There's the IBs, as I mentioned. There's the VWAP for the RTH and the Globex. And there's a mid for the RTH. That's all. Let's jump over and look at the look quickly at the statistics now, which are, seems like I'm forgetting some, but I don't know what. So here's the statistics study, and it comes from IRT. We have determined without question we're going to be opening lower in range. You see there's only 4 open types. And the way this works is it looks backwards at 2,000 days. Of the 2,000 days, we opened lower in range, lower out of range 292 times, very seldom, for only 14%. Of these 2 days where we opened lower outer range, price revisited the overnight volume point of control 82.9% or 242 times. So that we jump back over here and we go overnight volume point of control, 82.9. Boop. Next on, and then I just go down the list. Next on the order of business is the IB high, and that is 69. That doesn't make any sense. 69.2% of the time. Overnight low, 68.8. Let's go there. Overnight low, 68.8. I can't believe that the IB high, that seems kind of weird to me, frankly. 69.2% of the time we supposedly visited the initial balance high. So where the hell is that? That's right up here. So 68 point, what is it? 69.2. Now the reason this is covered up is because on Friday, the high of the day and the high made in the first 1 hour was the previous RTH high. It never got back up there even close all day Friday. There you go. 68.5 is the overnight mid. So now let's open these up a little bit. I think that's going to be right here, unless that's settlement. Yeah, that's settlement. Overnight mid is 68.5. Wow, this is a weird day. I don't know what to think about this. I'm going to be extremely extra cautious, which I know is terrible to hear, but it's a long weekend. I didn't know. I have no explanation for why we're having this huge sell-off, and I can't find any news about it. So that makes me really leery. Previous low is 67.5. There you go. And the IB low is 60.3. Now I want to point something out to you here. Oh, wait a second. Then that's the IB low. Boy, I'm not firing on very good on many cylinders today. Let's get up here. And I forgot to do something very important. This is the IB low, a high, right? IB high. And why am I doing that? Because the moment we open, by definition, the high and the low mark simply the high and low of the first 1 hour of trade in the RTH session. So the second we open, these two levels are going to change and go somewhere else. And that's why I need to put that initial at the back end, and so I know what percentage those represent. The previous value area low is 47.9, and that's right there. Now these are the following. This is the value area low and high, and this is developing value area low and high. They are developing means the current auction, and just the value area low and high is the previous auction. Okay. I'm going to now jump over to a snap I do every day. which is the TLab nap. And hold on, I'll tell you what I'm doing here in a minute. Okay, the TLab snap. What is the TLab snap? Well, the TLab is a bookmap Discord chat room called the Traders Lab. It's started by a guy named Tom B. He's a professional trader with about 46 years experience. And the most impressive part of the place to me is the fact that it is completely free. You don't even have to be a subscriber to Bookmap in order to participate and take advantage of all the resources there. Like here, basically, but that's been going a while. There's a good crew of people in there. They're pretty mature and focused on trading as a business. I'm not going to try to name names because then I'll forget somebody. And I only recommend that one room in the Bookmap Discord chat room because there are a lot of rooms, I guess, chat rooms in there. I don't even know how many, but the only other two that I visited were typical. The guy was trying to sell something about the third word out of their mouth, and that's fine with me and fine for them to do and fine for Bookmap to support, but it's not what I'm interested in, so I don't recommend them. So it's called the Traders Lab by Tom B. If you want to go there, you've got to join the Bookmap Discord server. There's a link in the description, and then wander over there and see what you think. Every day I make a couple of posts in there. This is one of them that I post with all the levels for everybody and or from here. These are all the levels that you might want for the day and previous days, several sessions back. Notice that I scrubbed out the holidays. And let's get back to the order of business now. All right. Let's see. I didn't do anything correctly this week. I didn't get my naked volume points of control updated on my Bookmap. I was busy trying to do some coding, and when I do that with the back testing, I get in a... I don't know whether it's just because I'm getting so damn old or what, but it's getting to be where I forget stuff, and I get so focused on what I'm doing, I lose track of what's up. You'll see that all of these naked volume points of control here are black text, and that means they've already been revisited. So this is what I typically do every weekend. I take all these back. I get rid of all these and go away. I get rid of these because I have a record of them on my charting. But now I know this is the most recent live NVPOC, and let's see what our current one. Well, 75.17 quarter. Let's see if we've got that up here. And that's 65, by the way. Yeah. And there we go. There's that. There's our POC. This is that flurry of stupidness with who's on third and I don't know who's on fourth. All right. So I guess we're getting ready to open here, huh? We've got 5 minutes to go. Let's think about something that's also very important, which is being able to trade. And that is done this way. If you're going to trade with Bookmap, you've got to enable the trade control panel. Pick a method you will use to trade with your mouse in the application. If you choose chart, the only place you can trade with your mouse is the active data column. If you choose DOM, the only place you can trade with your mouse are the DOM columns, mouse or the DOM columns, and both are both columns. There you go. Then I need to select, because I trade multi-brackets, and this is the risk neutral methodology. This is the smallest risk neutral package, which is 2 lots. It needs to be an even number. So there's 2 contracts or lots or cars, whatever you want to call them. Then you determine what stop size you want to use for the entire package. And you can do, the first criteria that you need to think about is your account risk tolerance, and then volatility of the market, et cetera, et cetera. Anyway, once you come up with the stop size for the entire package, the first risk neutral scale is automatic because it is for the same stop size positive as the stop would be. It's for the same target size in ticks in the positive as the stop is negative, and it's for half of the package. The idea being that when you achieve the first profit target, you are then risk neutral. The worst that can happen in the trade is a scratch. And the balance of the contracts are put at whatever runner. If you want to choose a 4 lot, there you go. If you think it's too volatile, there you go. It's real easy. And it's really phenomenal. The next thing I do, because of is I choose this. This means that once I make a trade here, it will copy to 4 other accounts. So when this says 60 ticks up here, which is the amount of ticks profitable on my 2-lot package with both targets hit, that means that there's 300 ticks earned. Now, I'll get into that in one more second. The next thing I do after I've set the multi-bracket, et cetera, is I confirm the package size. I confirm that it's on the way I want to integrate or interact with the thing, and I click this again. Now I get the real estate back. I have the same data that was presented to me right here about any trade is visible up here. Plus I have the ability to cancel orders or close any trade. And I get that way. I don't believe you should trade your P&L, and these numbers are reflected in ticks. You can enter and trade with your keyboard if you, that moved again. The VPOC is also now moved clear down here to 64. Basically 80 points in a few minutes. That's amazing. Anyway, you can trade with your mouse and with your keyboard by hotkeys once you enable them and set them up. But you have to understand that in order to hotkey, the focus of the computer has got to be on the bookmap application, and that's standard with any OS system. Okay, we're going to open in 1 minute. I don't imagine that my RTH volume profile is going to reset as it's supposed to, so we'll listen to me complain about that. Now, this is the new location of the overnight volume point of control, right? So we have to move that down because this is the live market. And I don't know what the hell is going on, which is not a good thing. I've been looking for news since I hit the desk this morning about, I wasn't paying attention to the market because it was the holiday and I have my data feed off while I'm working on the back testing. Look at this shit, man. This is amazing. I don't know what they're doing other than they're just getting ready for non-farm payroll and they're showing the administration that they're not happy, I guess. I don't know. Look at this market profile chart. Jesus Christ, that's amazing, huh? Okay, we're going to get this to the... Oh, there we are. We've opened now, and we have not changed. Let's see if now we can reset that. At least it did that on the double click. That's better than nothing, I guess. Our IRT high and low are down here, but this is not reflected right. That's magical. I think everything's pretty screwed up today. I think I'm going to just be way wait and see-ish. This is pretty crazy. I'm dying to hear somebody's explanation for why we have had this giant 80-point sell-off overnight. What I'm doing now is over here is I'm changing all of my charting from full session to the RTH only. So all the charts are now RTH session only. And look at that gap. Wow. Okay, so we have gap rules in play. That's for sure. I don't know whether this is even working or not. Wow. Definitely gap rules, huh? And who knows? There's 100 points. Well, right there will be 100 points since about, well, London, I guess, so, as usual, those guys. So another workflow that I do now is I put a vertical line right here at the session open, and I do that for a reason. It is simply a visual clue for me. My new idea, which I can show you here, come on, I know you're there. Okay, my new idea is to keep the entire session in view here on the chart through the day or the evening until I'm going to potentially interact with the market in trade. Then I can zoom in. But this way I never lose focus of context. And I put this blue line here, and it's just a visual clue for me to glance left. If I see the blue line, I know I've got the whole session in view. If I don't, I know I need to adjust it. Here was the overnight. Straight down from 82. Now we are open in the RTH session, and here we are. So we'll start to keep that in view, and we'll see where we go. Gap rules. Well, what are the gap rules? They are, and they say the following. If we close the gap relatively early in the session, and especially if price is accepted within previous value, then we have an over 90% probability to trade across the previous value to the other side. I want to point out to you that we're almost 100 points down. I would suggest that closing the gap today is not going to be the case. I wouldn't be expecting that one myself. Look at where we closed and where we traded, and look at where we opened. Right down on these big swing pullback lows over here of the economic story. And this is the giant problem where we had the non-farm payroll the first time, and let's fire everybody. You know, and I suppose that's what the market is trying to see, what this new group are up to. I guess, I don't know. We're getting a lag over here of these are milliseconds. That's not great. Yeah, this whole day is I'm on my back foot, so you can bet your butt I'm not going to be jumping headlong into putting risk on the market. So I guess that's pretty much it on the gap rules, because I don't expect anything's going to happen with that today. If they close this gap, that'll be pretty phenomenal. And what would be the news that would cause that? On a bigger question, what would be the probability that we would well, Jorgensen says this is why we've had such a big drop. So this came from financial news, so I will have to jump back over there. Down here someplace it would be right there. Okay, there's the wow, Treasuries yield. That's huge. So here's the news that is probably the precipitant of what's going on this morning, and that was put out at 6:21 today. Yeah. Let's see where we are here. Well, we've got one in about 10 minutes or so, and that's S&P PMI. And then we've got the top of the hour. Wait a minute. What's going on here? Yeah, that's better. Jesus Christ. I guess I'm not doing too well here. Let's get back to the business at hand. All right. Anyway, I'm pretty foggy here, that's for sure. When I walk into the office and I see us down nearly 100 or 80 points in a couple of heartbeats, that's kind of shocking. Now, it's not a lot of fun. And had I not been committed to taking no trades off of the stream, this is when where did I walk into the market? Right here. About 7-ish o'clock-ish, right there. I could have just put on a short without any heat and been over the profit targets. This is 25 handles down here. Jesus, it's pretty amazing, you know. Anyway, what I was commenting on was this right here. There's 7 o'clock in the morning to the open. From here to here, that's about 25 handles. And basically no heat all the way down. So that's pretty disappointing. But I am committed to taking no trades off the stream for transparency and accountability, and I will always do that. That's the reason the stream is so long, which I think I mentioned early on, but anyway. Don't know what's happening here in the chat, the stream, and whatever else. Let's see. I'm kind of groggy. Which brings me to an important point for trading. You have to be sure that you're firing on all 8 cylinders, or however many you have, in all aspects. Your data, your charting, you personally, me personally. If I'm on tilt, if I'm not well rested, if I don't, I'm foggy about what's going on, like today, what the hell is this? I'm extremely cautious. That puts up a big red flag for me the solution to that, or the response to that, is not to start clicking the mouse like you're killing snakes. Fall back, get organized, make sure that you've got all your ducks in a row and you're following your process. That's really important, in my opinion. Well, I don't know why that does that every time. And that's, if you're, let me see if I can articulate this correctly. If you think that FOMO is bad, FOMO and losing is 10 times worse. So, FOMO and all of those kind of emotions that have come through it our evolution, and which you will never get rid of, by the way. I will never get rid of or, eliminate, need to be recognized and then not acted upon. Look at this mess here. Look at the VPOC jumping all over the place. And I'm not even I'm not even aware enough to be doing my job, which is my everyday thing, is to flag the VPOCs. And look at all the ones I've missed here. That's pretty stupid, isn't it? Don't know why. I had a tough weekend. I just struggled with coding up some stuff for back testing, and it drove me pretty frustrating when it just will not work. Now, flagging these VPOCs like this, migrating volume points of control, used to be a lot more important to me, because I used to be zoomed in like this, where I was, about 5 minutes out, and I was maybe $1 high like this one is, or a point high. The yellow brick road here continues to plot all day, but pretty soon it scrolls off the left, so you don't know that you were down here. You don't know that you were over here, right? And that's why these flags were really important at that juncture. But now that I have started this new concept of keeping the blue line over there so that I can watch the whole session in the chart, these aren't as important as they used to be, or don't have the same importance as they used to have, because I can see these two yellow lines will continue to plot faithfully, track the volume point of control the whole time. So we've got that one, we've got that one. I'm not going to do all these little nit-nat things here. That's just craziness. And we may just flop around here like a fish on the dock. You never know. Could be one of those days. It's definitely off to one of those days start. What have we got going on over here? Well, you see that we took out this VPOC right here, and now this is where our new one is. So you see there that was right there. Is that correct? That's about 88.5 on the 21st. Well, I'm telling you, this computer or this IRT and I are not getting along very good. 88.5. So there we go, 88.5, right on the money. And now my workflow is as follows. This is our one from the 21st. There we go. See, it all ties together. Isn't that cool? Love it when a plan comes together. My workflow is the following. When a level has been revisited, I change the text to black. Just gives another visual note for me, right? Yeah, this is pretty crazy. I don't know what I would suggest here. We had that one number out right there, I guess, 8:45-ish. Not much happened. Now we got another one at the top of the hour. Is that true? That's about a whole lot of nothing, isn't it? Global PMI is down 0.3. And then we've got ISM PMI and manufacturing prices at the top of the hour here, all of which are 3-star numbers. Here's our here we are. Again, this is Financial Juice. It's free. This is the schedule. This is more of a squawk box. Financialjuice.com. This is my economic calendar, which is investing.com. It also has the earnings, etc. Also free. And you can filter both of them, set them up for your time zone and all those kinds of things. I try to always focus and use free stuff so that it's, it's a case of do what I do, not do what I say, not do what I say. I think that's important this is my journal, remember? So who am I trying to kid? Who would I be trying to bullshit? Nobody. And here we have the IB high flag and the IB line. You see how they just caught up together, synchronized? Both of these, this indicator and this flag, which is a cloud note, are driven by the exact same data pushed instantaneously from IRT. The difference is I'm only able to set the refresh rate on the cloud note column at 1 minute, and whoever the folks were that built this indicator, now you see that it's just jumped up there, and in a little bit this flag is going to jump up here and match it. The folks who made this indicator were able to refresh quicker than a minute, obviously, because the data was pushed at exactly the same time for the cloud note and this flag. Now we're going to play leapfrog over the top because the market is continuing to rise up. And remember that both of those are being pushed right here. Well, we've already gone through and are back up to the weekly expected move, so that's not much good anymore. we came through the lower daily expected move like it wasn't even around. What are the expected moves, you ask? That is some new thing I'm trying to figure out about. It's based on the implied volatility in the options at the at-the-money strike. Options is really a pretty important piece of the puzzle. Futures, a lot of the futures trade are options hedging. And I think those guys are pretty smart, and they spend a lot of time looking at implied volatility and expected move, and that's all based on implied volatility, which comes back down to the Black-Scholes model originally or eventually, and it's just something that I picked up and I'm trying to track to see if it's got meaning for me or not. These numbers, just as the statistics were put in before the market ever opened, these expected volatility and expected moves were put in last night, right after the right after the ETH session opened. They're based on the opening print, and then there's an implied volatility expected move for the daily, and they're out every day based on strikes. And I don't understand much about options, and I really wish I did because I think it's important. But I'm running out of time to learn this stuff. I need to be successful and profitable here. Now I'm not. We're getting ready to come. We're coming up to the top of the hour, remember? And what do you notice that's wrong here? I don't see my little blue line over here, right? So I'm going to go like that. And there we go. Well, there we go. Now I know I've got the full session. Now, what is the session doing? Well, we bottomed out and IB low, and we're pushing the IB high up. We're up here to the Globex VWAP. If you look over here, we're pathetic little guy down here. But he came right down to within, these lows, these high volume nodes. And now we're going this direction. One point over here that I probably forgot. This black volume profile is the granddaddy. That represents all of the volume that I plot in my data, which is this says ESU5, which is obviously not the case because, everybody knows futures rolls every 90 days. So U5 certainly wasn't correct, but this is this is the current contract for the ES, and this data over here is the continuous contract, and it goes back to October 28th of 2021. Okay. Let's take a walk around the park here. Still showing, I don't know, IRT. Yeah, anyway. I wonder if everything's under control now. Let's check. It's the correct contract size. I've selected both. Let's make sure that our copy account and all that is right. That's correct. Okay. Oh, yes. A bit of explanation about what that's all about. I almost forgot. Sorry about that. This is a right here. I'm trading a TopStep evaluation account and 4 others behind it. That's what the copying does. My thinking was when I started this in the stream, well, actually the stream probably started a little before, sometime before that, but this is 0 to hero. So this will transparently and accurately and completely record and be a historical record of 0 to hero for this system. Trading the ES on a TopStep evaluation account, a 50K TopStep evaluation account, all the way through evaluation, XFA, and live account. And I don't blow up. I don't need to reset. And these 5 accounts are within 1 trade now of all 5 being in the XFA. One more 2-lot trade to both targets, of course. And I apologize that I have not been able to figure out how to show the dashboard or whatever. I'm still on the old dashboard. Maybe the new one's different. I don't know, with TopStep. I haven't been able to figure out how to show a record of that without revealing, account data that isn't account number and password, stuff like that. That isn't, is not for, not for public consumption. I realize that it's important to be able to do that and to substantiate the fact, but at the moment, this is where it's at. What I was doing was taking a screen snap of it on my other machine. I just don't know what to do so that it can be sanitized, And maybe it isn't important, but I think it is. Okay, we've tested the IB high up here. We've now clawed our way back for about 20, 40 handles. Is that right? Wow, 83 to 16. Well, damn near 20, damn near 40 handles. Holy smokes. We got a lot of volatility going on here. And we're going to put a new number in about 50 seconds. Caution, top of the hour. The book is not thinning out much. It's pretty thin already, right, to be honest. And there, no, 15 seconds is the number. This is the ISM PMI. You'll notice that my screens have the hour, minute, second, and the date. So, and that my screens here are, let's hear the number in 2 seconds. Boom. There we go. Well, it looks like the ISM number was a little bit good. You see us happening here? My screens are, you'll notice that my screens are the entire monitor, not just the application. My thinking there is to further the transparency and accountability. You can see any programs that I have open at the bottom. and you can see the hour, minute, seconds, and the date. So I'm trying to alleviate any possible query of what's this old fart up to. And for myself, and I can look down there and see what's going on when I review the streams, which I do every day. Well, this doesn't look like much until you go, this is 64.12 and this is 64 quarters. So this is 12 handles. Now, the problem is we have such dramatic moves here that we're 3 points wide, 3.5 points wide on all of our, we can't even come close to 1 point on our, which is how I like to keep it. There's 5 handle. No, that's more than that. Let's see if we can get close to 1 here. I don't think so. I think it's swinging way too far. Okay, there's 1 handle, and you see that we can barely keep them inside the monitor. These are 4Ks, by the way. So that doesn't do us much good. But here's our volatility today. Way crazy. Okay, now what are we doing here? Well, now the numbers are out of the way and they're all bad across the board. They were all a miss. Boom. Not that that's at all surprising. Wow, this is pretty substantial though. 2.6. Huh. Okay. Construction spending is up, they say. Jesus Christ. Space Command. What the hell is this more? Wow, what are they doing? Trump to announce Space Command headquarters at 1400. Really? Eastern Standard Time, which means he's going to be speaking right here. That's what this is all about right here. So Space Command, I guess I don't have to worry too much about that. I don't think that's going to impact the market too much. Maybe it's are we doing Marvel cartoons now or what the hell, you know? Wow. I don't really get it. I would think that something about the economy and the disaster of the human disasters that are going on here now might be more important than that, but that's just my opinion. Good morning, whoever's there, and drop something in the chat. Thumbs up, subscribe, send money, you know, all that stuff. all the usual things. Okay, I got the mouse charged. Somebody put crack in the water cooler apparently in London, and that fell out of bed. Let's take a loop through the garden here. Well, this is the market profile chart. And this is the RTH session. If you want to see what happened overnight, look at this mess. This is the full session so far. This is where we're trading. This doesn't do splits like that. And this is just the RTH session now. So what we've done is eliminated. You see that we've eliminated this overnight thing. Here we are. This is today, and this is Friday. The naked volume points of control to be aware of, which I hope I have all accurately represented on my charting. And this is kind of something you need to look closely at. You see how this was from last, whatever day that is. This is from the 21st right here. So we got Friday, Thursday, Wednesday, whatever day that is, 21st. I'm groggy. And then now this at 92 is the VPOC for today. You see how the little jump shift there? Today closed out, revisited this one from the 21st. And now we are trading here. So let's see how that looks on our charting quickly. On Bookmap, well, there we are. Here was the 21st. And that was taken out right here by our trade. And now here is our VPOC now. And I want to see something here. Oh, okay. You see how this little teeny weeny jog right here? It's this difference between here and here. And I'm not going to worry about that at this point. I don't think. Let's see if I can do that. Come on. There we go. Okay. Now to refresh the memory. What's going on here? I've broken something upstairs here. Oh no. Okay. To refresh the memory. The VPOC, or either POC, the full session, which is here, the more muted yellow, or the RTH session, which is the brighter yellow, is nothing more than the marker, the price marker, for where the most contracts have traded so far in the session. So, for the full session here, at 94. The most contracts right here have traded, and it's just numbers. Nothing is magical. Nothing is mysterious. It's all math, probability, and numbers. The very split, and here, let's look at today. Let's look at the current session. So here we are at 9,200 is our overnight, is our current RTH volume point of control. The very split second that one of these price levels, 94, for example, well, we can't really read the volume here because it's of the way I have it compacted on the price scale. There's not a number there. But let's imagine it's between, well, we know without question it's between 54 and 56. It's greater than that, right? And here's, so the minute, let's say it's 57. Let's call it 57. The very split second that one of these other ones is 5701, here perhaps, the POC is going to move there. That's all there's to it. It just marks the price at which the most contracts have traded. So it's very simple for you to determine. Let's look up here. Up here, right here, for example, at 13 quarter, this very second that 13 quarter chart trades more than one contract high, more than down here, this POC is going to move right up here. Easy. Simple. It's all just numbers, data, statistics, and math. And you can sound like you're, astronomist by telling everybody, well, the POCs, expect a POC migration up here to blah, blah, blah price, because you're watching the numbers over here. And you see when you're within striking distance, you can say this is going to happen up here. I predict it's going to be up here around 64.13 for too long. Because we've only got about 1,000 contracts to get up here. And the POC will migrate up there. It's that simple. Oh. And what am I doing now? I'm way behind on everything. My screen snapping and my everything else. Why did you not do that? Yeah, so the migration to the POC is just real easy. There we are at 47, right? The minute we get 1,000 more contracts, assuming that we're at about 57 down here, we're going to be there. That's it. Mm-hmm. Now, something that you need to remember here is gap rules, which I already talked about. And the fact that, just think about it now for a minute. Let me see where that is here. I don't really have that in there. Looking at my chapters, my hotkey chapters for the markers. Boy, my eyes are bad. You can tell when I'm tired, it's really tough. I guess we'll do that. So, think about it now. Everybody went home on Friday. Up here. Here's where we closed. And this morning, the market opened down here. 100, well, no, more or less 80 points, 70 points from the close. What do you suppose happened to all those stops and all those positions? And why did that happen? Well, the market is a zero-sum game. Oh, you know? And what do I mean by that? I mean that for every... The first thing you've got to understand, or that needs to be recognized about futures, is that it is a zero-sum game. That's why they call them contracts. They don't call them shares. They don't call them stock. They call them a contract because it is a contract between a buyer and a seller. There is no possibility that there is ever more buyers than sellers or sellers than buyers. It's physically impossible because it's a contract between one of each. How does the market go up or down? Aggression. Right now, the market is trading up a bit because the buyers are aggressively going across the inside bid and lifting the ask. When the market goes down, the sellers come across the inside bid and hit inside market and hit the bid, and that's it. We've got 264 contracts living down here at 64.7.5. Those guys are waiting. They're putting liquidity in the book, and that has nothing to do with market going up or down. What has to do with the market going up and down is aggression. And there is never a case, I repeat, never a case where there's more buyers than sellers or sellers than buyers. If anybody says that, they are they don't understand the way the futures market works, and that's futures is all I'm talking about. So take that one more step and get over here. What happened? Something that's important to remember is, if I can show you this, maybe like this. What has the market done? Well, let's try to get the whole thing in view here. That might be handy. Back to March, right? Or April, anyway. Well, the market went down to go up. Previously, it went up to go down. This is, oh, we're going to have tariffs. Won't it be wonderful? Well, maybe we won't. Let's postpone them 90 days. Let's ... And up you go. And throughout that time, in various time frames, the market goes up to go down and goes down to go up. Why does that happen? This is my opinion. So, this is my stream. It's my ball and my bat. So, we're going to play the game this way. And this is not just my understanding or I didn't work this out on my own. This is, well understood by very successful traders. Every time this market did this, every time the market did this, every time one of these buyers took a contract and up we went, every time a buyer comes across and hits the ask, lifts the ask to take us higher, somebody sold it to him. How is that somebody up here that sold going to make money? How's the guy that sold down here going to make money? He's going to come across the market and hit the bid and take it down lower. That's it. What happened over here? Same idea. the market went up to go down, it goes down to go up, it goes up to go down. Now, this big gap in the holiday, kind of unusual. We don't have a lot of gaps, so which reminds me I've got to mark that gap. But that's what happens. And in my opinion, the person on the other side of most of that trading is typically in the higher time frame. And the people that get chopped up or get hammered so bad are the lighter traders, or the smaller traders, retail, the lower time, or the more at the lower time frame traders. And that's how the market works. And that's a fact, Jack. Think about it. If you sold to somebody right down here who was all exuberant, and they were buying and they were buying and they were buying and they were buying, how do you make money? Selling. You take the price lower. Selling, selling, selling. I mean, in the case of, and typically in the cases, they don't even have to do it and they don't have to do it intentionally. It's, they're hitting stops all the way down. They are cleaning those stops out, or that liquidity out, and that's how the market moves, in my opinion, and I think the opinion of an awful lot of people. So there you go. That's my story, and I'm sticking to it. All right, let's see what else is going on here. We're getting two definite multi-distributions in here. You can see them over here. I think it's a pretty far stretch that we would close the gap anytime soon, but it'll happen at some point, because that's how that works. Well, I forgot to do everything. I'm going to get my mice charged up here. Okay, so wish I'd quit hitting that mouse. I have a couple of 3 keyboards and a couple of mice, and it's kind of confusing sometimes. Okay, where am I now? What are we doing here? Well, we're at 9:30. We're approaching the IB high. The IB statistic. Okay. Well, the initial balance is a statistic that only happens after 9:30 in the morning. What is the initial balance? Remember the definition? It's the high and low of the first 1 hour. So there's a pretty high statistic that's, I don't know what it is in the lower outer range, to be absolutely honest with you. It is greater than 97.5% in all 4 open types, and in this one, it is 97.6% probability. Wow, it's itching like crazy. 7.6% probability that we will close, that the IB high or low will be exceeded by price in the balance of the RTH session. And here is that statistic. Higher outer range, higher in range, lower in range, lower outer range. 97.6%, it'll be done. What's that mean? Well, it means that at 9:30, the IB high or low will be, there's a 97% probability that price will take out or exceed the high or low of the IB in the balance of the trading session. Now, that's not a statistic that you should trade to, but it is a statistic that I'm vetting, and there are 2 trades associated with that. Now, there's the high, which we just put in because we gapped way low, and we've been pushing up, right? get over here. So we gapped low. Here's the IB high and the IB low. Push it down a little bit, and now we're pushing the IB high up to here. Two distributions. There's the IB high, 64 quarter, and the IB low is down here, whatever that says in blue that I can't read. There you go. It's about 83 half. So at after 9:30 in 4 minutes, this one or this one will be taken out at some point or exceeded by price at some point in the balance of the RTH session. There are two trades associated with the initial balance, and that is an initial balance failure, where price come up here, bluff around, revert to the mean. Or there's an IB continuation, where it takes off and goes the other way. It continues in the direction of price. Typically, a mean reversion trade, the IB failure, is when we have a balanced day. The IB continuation is typically favored or suggested when we have a directional day. Now, this is a crazy day, for sure. And I think a very good day if your goal on your, if you realize that the initial or the prime directive of a trader is to manage your risk and preserve your account, this is a really good day to be extra cautious. Any kind of a big gap like this. In my opinion. And one thing I will say, definitely do not try to trade to the statistics, to the statistic. What does that mean? That means that, okay, we're going to have the, in 2 minutes, we're going to have the statistic will be set. It will be 9:30 and these will cease to move. This won't go up anymore. This won't go down anymore. Meaning that the IB statistic is in play. Well, we're above the mean, we're above the, both POCs, we're above the mid, we're above the RTH VPO, or VWAP. I think we're going to take out the IB high. I'm going to trade that way. Absolutely bad idea. I mean, bad idea from my experience. May work for you, great. But for me, I've tried that a number of times and I get hammered every time. Not every time, but you know, it doesn't work statistically. What I want to do is, and the statistic says that it is after 9:30. So I am going to try to be disciplined and follow my plan. Aha, and there's that move I talked about. There's that IB, there's that VPOC migration. Oops, that's not the correct one. I'm sorry. This is the full session over here. This is not the RTH session, which is down here. Pretty quick. This will get up here. Not by much. It only needs a couple hundred contracts, but it'll get there. This one, this is the RTH session. Man, I don't feel good. Blech. I don't drink anymore. I gave that up a while ago. So, not that I drank a lot, but I would have wine every now and then. In the evenings, I don't. I thought that was. I'm trying to lose some weight, so that's the first thing I always do. do to, if I want to cut weight in a hurry, just don't drink for a while. In that, you know, a glass of wine or two in the evening is the extent of my drinking these days. There we go. See how that moved and how in true Nostradamus fashion I was able to predict that? Obviously not. Obviously, it's just math and numbers. Now, there's a lot of traders that I am working on vetting and trading the IB statistic, the IB trades, of which there's two. I just described that. There's also the VPOC migration setup, which is one a lot of people like to do. And that would be, if you wanted to trade that, you would say, okay, the VPOC migrated up here. So that's suggesting that price is being accepted higher, and that would, to some people, constitute a long entry. I've not had good success with that setup because, yeah, it's real simple to see where the yellow brick road goes, but what's going to happen now? In this case, okay, there's the VWAP, there's the developing value area high. Might come back and test here, might go up, might come down and test these levels, this support, and go back up. Might come down here, might come down here. Tom calls these price check at aisle 3. That's not a setup that's worked well for me in the past, and so I'm not focused on vetting that one at this time. And when I say vetting a trade, that means I am only looking at those two trades to build a representative data set to validate statistically whether that setup has edge or expectancy. Or not. And now the IB has been set. It's after 9:30. This will not move anymore, nor will this. So we see what we're doing now and where we're going. Be right back. Well, if you're trading that IB or the VPOC migration, that worked pretty nice so far. Remember that the risk neutral scale is 3 points. So, you know, if you got in around 14, there's your scale. And now you're just got your helmet on and your feet up and going to try to see where it's going to go. I can safely say, looking at this market so far, I have no inclination or anticipation about what's going to happen here. And that's a really good reason to be extra cautious and very definitely not just randomly put on a trade. In this kind of an environment, as I mentioned, the suggested trade would be the IB continuation because we're basically directional, right? But in the face of this big sell-off and gap down, I don't know what to think about that. I guess my monkey mind is kind of thinking, well, I think maybe a VPOC failures or the IB failure might be the more prone trade. I don't know. I can tell you for sure that if I feel like this right now, I'm going to not be rushing to click the mouse. Come on, man, get away. I'm tired of looking at that thing. And that's not to say that I'm going to short this thing either, but much as I hate to say it, that is pretty much to say that I'm going to be real cautious. And that sucks. I don't have time to be cautious. I mean, I don't have time to be real. Well, let me rephrase that. I was going to say I don't have the time to be real cautious. I need to get this trading underway. But on the other hand, I don't have time not to be. I don't have, time's not the right word, but I guess it's time to say trading as a business to approach trading as a business rather than a gambling. You need to come to some realizations or understanding, in my belief. First of all, trading, this is a random market. You stop and think about all the participants and the influence on this that happens and the random possibility of when somebody will execute or do something. It's a random environment. And it's a statistical fact that the outcome of the next trade, the next movement here is 50-50. just noise, it can be up or down. And it's binary. It's 50-50 because the market price only goes up or down. It doesn't go horizontally. That's what we do with time. So understanding that's the case, then what do? Well, you, as I've referred to already this morning and every other day, you try to identify something, some repeatable pattern or outcome that happens that you can identify. So that's why we do things like the IB high, the IB low, the migration of the VPOC. That's something that happens every day. Those are things that happen every day, as do many other things. But let's just pick those as examples and take the IB trades, which I'm currently vetting. Then what do? Well, you say you identify that level. That's a setup. So when the price, come on, man, go away. I don't know what's going on here now. When price, my other mouse keeps acting up. When price takes out the IB statistic, that is a known thing. And historically known for years. So that's easy to identify. And there's no question about it. Now that it's 9:30, price goes up here and goes through the IB high, or it goes down here and goes through the IB low. That statistic has been satisfied, and that has definitely happened. There's no gray area or any kind of judgment or interpretation or anything. So that's a good setup. Identifiable. Then you determine what will be the criteria that you find meaningful to suggest, let's take the IB high. It's been taken out. Now, what is the criteria that will suggest to you as a trader to do the IB failure, which is to revert back, or to do the IB continuation, which is to go up? Come up through, test back down, go up here, can't get back down, whatever that criteria is, then you capture a statistically significant data set of that setup and those criteria. And by statistically significant, I mean the stop's got to be the same, the targets have got to be the same, the setup has got to be same as you can, as mechanical as you can get it, so that you're comparing apples and apples, not apples and pigs, And you want to have enough instances of that so that you get the data outside of the probability of a random occurrence. Everybody knows that a coin flip is 50-50. Flip a coin 10 times, and it's not surprising that you'll get a majority of heads or a majority of tails. That's because 10 times is not outside the probability of a random distribution. Doesn't mean the coin is still not 50-50. Doesn't mean it has more sides than two. It means you didn't flip it enough. Now flip that coin 1,000 times and you're going to get pretty close to 50-50. So you want to have your test data set be outside of that random distribution as far as you can, the possibility of random distribution, and they need to be identical. And ideally, you do that with a backtesting system over data or something, so that you're away from the market, right? Programmatically is the best way, if you can. I'm struggling to do that. After you have gotten that data set captured, then you determine whether there is a statistical edge, a probability, an expectancy, whichever word you want to use for that setup and those criteria. And if so, then you take that every time it presents itself in the live market. And the law of large numbers will apply. to increase that edge, multiply that edge to your and increase your bank account. That is not just something I dreamed up. That is a statistical fact over history. In trading, it goes way back to Jesse Livermore and probably people before him. Ed Thorpe, Jim Simmons, Ray Dalio, Paul Tudor Jones, Tom Sosnoff, Tom the Trader, best loser wins, Tom B in the Traders Lab, Rod, those of us in Static, whatever, from the most successful hedge funds, traders, down to the successful guys who are running a successful trading business day to day on our level, on my level. And also added confidence confirmation. It's the exact business model of a casino. A casino plays no game, which they have not pre-identified an edge. Then on the casino floor, their only mission is to play that game as many times as they can and let the edge multiply through the law of large numbers. They know that they will have losers, or, gamblers will win. We know we'll take stops. But the pit boss, when somebody wins, the pit boss doesn't shoot the dealer or change all the rules. They just deal the next hand. And that's what you have to do with trading. And that's how the law of large numbers, and that's trading as a business, and a business based on probabilities. And you don't look, your business, your life, your emotions don't hinge on the next trade. They hinge on the data set. Am I within my expectancy? And if that's yes, then you keep going. That is how to do it. So there you have the Holy Grail. It's a business of probabilities, and you have to be disciplined about trading that. Whipping and spurring and gambling, and I think this is going there, or I hope this is going somewhere else. That's got nothing to do with it. That's a different thing, and if that's what you enjoy doing and you like the adrenaline, then good for you. Look at here. Look at how well this VPOC migration's working out. You got scaled, now you're stopped, and now it's down here, and now it's going down here, and now it's going further. And this kind of adds credibility to my hesitation or my skepticism about the possibility of an IB continuation trade, even though we are in a multiple distribution. Just given the fact that we're on a gap down, and I don't have any statistics about that gap rule story to do with the probability, but that's if you're good at computer coding and whatnot, that's the way that it can really pay out. Which reminds me, I got billed for something I didn't want to pay on Anaconda for Python. I got to check that out. There you are. Holy Grail. Merry Christmas. And following along with that idea of vetting a trade, and I'm not at this point, because I'm vetting the IB trades, i.e. the 2 IB trades, failure and continuation. I'm watching this stuff, but I'm not even remotely concerned with the fact that I should be entering this trade or any other trade, because that's not what I'm working on at this time. And that's part of being, I don't know whether you call it disciplined or whatever it is, but that's got to be that way. Otherwise, you're on the road to ruin, I think. And it's real important to point out that this is my stream, right? My virtual journal, trading journal. It's not a case of my way or the highway. Ooh, look at us down there now. It's what I'm doing. And I share it openly with full transparency and accountability. Because who am I going to bullshit? Me? How stupid is that? Oh, I'm gonna walk in the bathroom. Oh, you're so young and handsome. I mean, you know, come on. I guess there's people that do that, but you know, I mean, I don't think it's got a long-term benefit. What I'm trying to do, or I am doing, is developing a statistically significant, probabilistic, consistently profitable trading business, which is a business of probabilities. And I share that, and if somebody wants to, if that helps somebody, that would be really great. Say something, you know, drop that something in the chat, or I think you're full of crap, and I don't, whatever it is. That's your opinion. But be sure you understand my point of view and my motivation here. And speaking of that, take a run through the roses here. This is the news, one of my 2 news sources. This is Financial Juice, free. You can pay for it if you want to, but I try to share everything that's free. We've had nothing but bad news in the numbers this morning. We're trying to do all kinds of, you know, we're forcing I don't even know what the hell. We have received notification from the U.S. government that authorization for TSMC will be revoked effective. In other words, this is getting data, getting material from China. This is Taiwan Semiconductor. I don't know how we have the business to say anything. That's like saying we prevent Poland from buying something from Yugoslavia. What the hell? I mean, I don't know how that works. I don't know what that even means. I don't get it. U.S. pulls TSMC's waiver for China shipments of chip supplies. Does that mean? I don't know. Jesus Christ. That's confusing for me. Anyway, here we have our news. This is my old favorite, because I like the display for posting and whatnot. This is also free. This is investing.com. There's a good earnings section. You can filter it however you want. Those are the news. That's my 2 news sources. Here is Run Through the Roses. Now, this is the E-minis and the NASDAQ mini. I also plot the micros over here. No, here's something that I haven't remembered to look at today. Ooh, look at our volume. We're 121% volume over average, but I need to be. What the hell is that? This didn't like the. I don't know how this can even be. How can this be possible? Why don't I have a number over here? Well, I'm not going to mess with this right now. You need to be careful because we've had extremely light days in recent history. So how far back this looks, average could be way low, if you see my point. And I hate holidays because it screws up everything. The data will iron itself out. I'm only plotting. This is Friday. And this is Monday. So the overnight, and this is Friday RTH session, and this is today's Monday. This is today's RTH session. So that holiday crap from Sunday night and Monday morning is not here, is scrubbed. And also then the overnight from last night at 1700 through 8:30 this morning is now off because this is 8:30 this is the RTH session. We're down 1.13%. Volume is up higher for sure. Because I am familiar with just watching this daily. We're at 808,000 contracts from starting at 1700 last night. Sorry. And so that is, typically we're at about 1.3 million around the end of the day. So we're up there quite a ways today so far. The ES, the NQ, micro composite, and the market profile. And our old friend Bookmap. Remember the blue line here is just a visual reference so that I can glance left and understand that be confident that I have the full session in view. And here's our session so far today, RTH session. And this is about a 1.25 wide. Come on, man, what the hell is going on? There we go. No. Wrong way the wrong way. This is typically how I prefer it, and that is 1 point high. Each price level is 1 point, and then the full session. This is all so that I can get some perspective of scale of what we're doing. You can get so zoomed in. I can get so zoomed in on Bookmap that I don't know whether we're foot or horseback. I don't know what's going on or where we are or anything else. You can get into this part. And I don't think that gives you enough information. Jim Dalton would say that you're going to get cognitive dissonance. I actually did a thing with an intensive with him one time. And from his own mouth, any kind of a dome, any kind of book map, order flow type stuff, other than at least a minimum 5-minute chart, and or most importantly, what his favorite is the market profile. Any of these tools is horrible for a trader. Now, I obviously don't necessarily agree with that, but that's his point of view. Yeah, if you're new to the stream or just passing through, say hi, thumbs up, drop something in the chat, which I assume is working. I don't know. Let's check. There we go. Yeah, okay. I'm not exactly, as you might have figured out here, as experienced YouTube influencer. It's a great tool, though, that's for sure. And OBS is phenomenal and free. The thing that amazes me about all of this streaming stuff is everything outward facing here is free. OBS, YouTube. I mean, obviously, the stuff here that I am streaming, my charts and the data and all of that noise, got to pay for and everything, but and the equipment, but the software and the facility is all free. Pretty amazing. How long that lasts, who the hell knows? But okay. Hmm. Okay. And I'll remind you that we have not taken out either IB statistic yet. You see how, you see why my recommendation, my strong recommendation, reaffirmation to myself not to trade toward the statistic. Boom. Uh-oh. Would have been a bad idea. And same can be said for down here, maybe. the opposite view of that statistic where 97.6% of the probability that in this open type that either the IB high or low will be taken out at some point in the RTH session is a statistic that I don't remember ever having. Well, I'm sure I must have seen it, but I don't remember it. If it's 97 point, what is it? Let's be specific here. (97.6%). That means that it's a 2.4% probability that neither the low, IB low, or IB high are taken out in the entire trading session. So that's another way to look at it, right? I guess you could say that's the classic. Ooh, and here we're going to come back down again. You see how the whole session is leading the way for the RTH? Now we're down here. It's 78. So this is 66.29, right? And up here, 66.34. The second this level trades about 4 more contracts, 5, this IB is going to migrate, or this VPOC is going to migrate right there. Anyway, back to that statistic. Looking at it both ways is like the glass half full or the glass half empty, I guess. And pretty quick. It's got to be 70 something because we have, there's 70.3 and we're in the middle there. So it's a little bit above that. So here's 69-ish. See how many it takes to get there. And that will bring this VPOC right back down here. Or not. Never know. Be a little hard pressed to believe we won't get another handful of contracts down here, 1,000 or so. And here's that price check at aisle 3. Boom, exactly. Exactly. Come on, get us down there. There we go. So it only took 100 contracts now. And there we are back down here again. I'm truly a soothsayer. Huh? Now, looping back to the old gap rules idea, the follow-on to the, if we close the gap early in the session and if we're accepted back into value, we'll trade, high probability we'll trade across value. The opposite side of that coin, or the rest of this of that saying, is that if we don't close that gap or do any of those things relatively early in the session, it's a high probability that we'll continue trading in the direction of the gap, which would mean going lower. Oh, man. Excuse me. Computer, I haven't even turned on the email or anything yet over their Outlook yet. No way. That's irritating. And here we go. Continuing in the direction of the gap, and again, do not trade towards the statistic, but I'm guessing that it's probably going to be relatively, definitely it's a higher probability we're going to get the IB low than the IB high at this point. Oh. Point out that that is exactly where we traded to before, huh? Right to that RTH low. Now, are we going to go lower than that? Likely. Down to here in the low? Probably. Are we going to get it? Are we going to get it? Ooh, baby, I guess we're going to get it right now, baby. I'd say we're going to get that statistic now. And I will be the first to point out that we may turn right around and go back up here. Would not be the first time ever. And good morning. Here we are. Stuck in the middle again. Big gap down, gazillion points. Oh, I got to put that crap all in too, by the way. So here's our gap low. How low can you go? I didn't get my gap stuff entered. I'm tired. I feel strange today. I don't know why. Gap low. Yeah, I can't remember what I'm doing. Gap low, what is this? The 020925. Okay, and where's the gap? Where the hell is the close anyway? Well, there's the low, so it's got to be above there. Well, that doesn't work out so good, does it? The hell's a close on Friday? Well, let's see here. I'm guessing it was about 64.70 half-ish. Yeah, I'm going to say 64.70 half. It's pretty weird. The close is not reflected here. Huh. I'm not sure that this is exactly correct, but I need to look into the issue as to why that close is not showing up. It's got to do, I mean, I know exactly what it is. It's got to do with the damn holiday. Blah, blah, blah. What was the Friday? Was the 30th, right? There you go. I'll call that square. You see what trading to the statistic can do for you? I mean, if you think about this in terms of the risk neutral scale and the risk neutral package, which I use, okay, you're going to trade for that statistic and you got in at 84 quarter. And right there, you're stopped out without even remotely getting to a risk neutral scale. And that's not, I'm not saying in any way, shape, or form that it's not liable to go down and take out the eye below. That would be, I mean, if you just take a look at it, that's the most probable possibility. You know, here is 5 points from here to here, and there is 88, 40 points up here. Whatever it is, 88 to, yeah. Well, okay, 30. Call it 90. 35 handles. I'm going to see something here. I didn't do that. This thing has done something that I didn't do. It's put the V-pound number behind every one of these levels. I didn't do that. Huh. That's pretty weird. That's very strange, I think. Huh. Boy, this IRT is struggling. That's pretty weird. And I'm not seeing the previous close or any of that stuff. Huh, huh, huh. Wow, crazy. Hmm. That's pretty weird. That is pretty strange. Okay, have we got it yet? No, baby, we have not. And what is, yeah, and what is this? Of course, you can try all of these. This is a retest of the price level, price level at at aisle 3 from underneath, and now we're going to go down and take out. There's 1,000 different ways you can justify doing that or rationalize it to yourself, but it's not the thing to do, in my opinion. Not for me to do. Oh, there we go. And they don't look like they're real excited to get a whole lot of lower ground here either, do they? What are they waiting for? 1033. Is there any kind of news bobbling around out there? There's no reports at all. Well, nothing until 1300. Go back and look at something there. Let me see. Yeah, I'm just standing here. Basically doing nothing. I know one thing I forgot to do. Sorry. There we go. Now we got that IB stat lower. So now the IB statistic has been taken. And what do we think is going to happen now? Well, I don't know. We're in new territory. Ooh, they continue to sell off. So we don't have a... Now the idea of my new watch the whole market deal is I would now zoom in because I would anticipate one of my two trades, confirm that that's all set up. This was no trigger, no anybody for the IB continuation trade here. Likely that's what we're going to get. But my particular... And it looks like we're going to trade down, but my particular setup and things have not been. The idea would be to take the statistic out, trade up above it, not get anywhere, come back down through, up here, and down, and none of that happened. Was this the place to quickly throw a short at 82, 78? That would be scaled. Here's a bunch of liquidity that was living at right here, 1,000 contracts stopped. No, that's just magical. Okay. See what other kind of trouble I can get into here. I don't want those V numbers displayed on all of those levels. It's goddamn stupid. Oh, RT. Let me go fill up my water bottle here. So get ready to trade. It seems like every time I walk away, some magic happens. Huh. Well, I don't guess it matters, but it's always irritating to me when software just changes something. Now, it likely has to do with my antics over the weekend with working on backtesting, but why that would be the case, I don't know. What I'm talking about here is, notice how the VPOC numbers or the variable numbers beside the title, that was never the case for years. And now it is today. And here's a snap from the last one. See the VPOC number? Here's last Friday. Nothing. And that's the way it should be. So the only thing that I did this weekend, I didn't even open this tab all weekend. What I did do is work on backtesting. It's just, and I don't see how to do that, how to turn it off or whatever else. It's just a tick box that show VPOC number with title. Oh, I do know what it is. I do know exactly what it is. I'm sure. I know. Now. But I didn't realize and it is a setting that I did turn on, but I didn't realize in a million years that it was. It's right here. In preferences, show VPOC number after title, and I didn't realize that was global. And there, they probably will turn off next time around. I guess, I hope. Whenever it probably restarts, I guess. I hope I don't have to do that for every frickin' one of them. That'd be kind of annoying. Well, that's not anything you guys need to worry about. So the way you do that actually is, it might be interesting. This is a pretty complex program. Preferences, user variables. These are all the user variables that I've got set up here. And I use them I was using them a lot for, let's just check one previous POC. And what would that be? 130 something. Here, let's get down to here. Yeah. Okay, so what'll happen here is that will undoubtedly need to restart the program, but that's okay. So there you go. There's a little lesson in the mysterious workings of IRT. Well, this is kind of gosh darn disappointing, isn't it? We blew right through our statistic. We didn't qualify for any of the parameters of the setup. There's the statistic has been hit, absolutely. Now, if you're a rearview mirror guy, you're going, hot damn, dude. The minute we had this VPOC migration south, I got short. Targeting the statistic and down. And if you did, good for you. You're ahead of the game by 25, 30 handles. Good for you. I can also, I'm as good at rearview mirror trading as anybody ever thought of being, actually. I can do that like a freaking wizard. If I could get paid, 25 cents on the dollar for my rearview mirror trading, I'd be a Elon Musk Jr. over here. But guess what? How's that IB high stat working out for anybody that tried to trade up there? Okay, looping back to the IB gap rules. We attempted to close the gap, but did not. And when that doesn't happen, the expectation is for the market to continue trading in the direction of the gap, which is exactly what we're doing. There's the gap. Now, granted, there's an overnight in here, but that doesn't figure in the gap. So there's the close, and the way I do it is when I figure gaps, it's session. Oh, that's right. I don't really need the close exactly. That was wrong of me. Sorry. It's this low and the open. That's the gap, in my opinion. So I need to straighten out my gap high over here and put it at the RTH low and not the close. But anyway, we got up here, we didn't close the gap, and what are we doing? We're trading back in the direction of the gap. It's amazing how frequently those old things work out. It's also amazing how frequently that's where I wanted it, a low. That's the gap, in my opinion, and look at us go. And will I, shall I FOMO? You bet. Big serving. Thank you very much. Will I act on it? Nope. And why didn't I take a trade after all this time and all this conversation about the IB trades? Well, because, yes, there's the IB statistic. Yes, it's moving in the direction, substantially in the direction of the IB continuation trade. But guess what? There is no the qualifying parameters, or the parameters required to qualify an entry, didn't happen. So what do? You stand here like a dork and talk to the microphone. Mr. Microphone. Maybe I could get a job with the government. I'm pretty good at microphoning. Like that kid that had been I wonder whatever happened to that guy. Some guy from, I think it was Austin. His job experience had been like an assistant manager in a fast food chain or something like that, and he got put into something by Nome or somebody in the government. He's like something. Like, holy shit. Obviously related to somebody, I guess. But yeah, well, is there FOMO? You bet your booties. And you see what happened? Open and close, and now they're back to normal. Well, isn't it cute? I remembered how to do it. I remembered how. How now, brown cow. There you are. Whoop. There's a lot of moving parts in this thing, that's for damn sure. I've been struggling with getting the back tested, properly coded up all weekend to the point I'm sick and have a headache and can't sleep and whatever else. Well, this just majorly sucks. I was quite hopeful that today I was going to get a test here, get on that continuation trade, because I didn't expect they were going to close the gap anytime soon. But it's really important to stick to the process, I believe. This really sucks. On a lot of different levels. It sucks that the American economy's taking a dump. Or pullback, I should say. Not unexpected at all. How long can you keep, irrational exuberance? There's no reason for flying to the sky. What I need to do now is, I am disappointed here though. There was this statistic, but got no confirmation or none of the other steps in my process to enter an IB continuation trade, which this is working out to be. There's 10 handles. My both profit targets require 12 points. And nothing on the news front until 1300. Space Command Headquarters, Jesus. Let me guess. I bet you 50 bob, but anybody here, $1, that it's got something to do with Elon Musk and SpaceX. That is going to be my duly recorded prophecy here. Because Trump desperately needs to get Elon Musk back on his side for money and, his buying votes thing like he did in the previous election for the midterms coming up. So that's a real important thing for them to do, for this administration to do, is to wrangle Musk and his money back into the fold, the mega fold or MAGA fold, however you say it. I believe, but in any case, for whatever the reason, I would predict that the new, let's call it exactly what it is. Trump to announce Space Command Headquarters. So there you go. Okay. Well, yeah. Unbelievable. Is this the world in reality, or is this a Marvel movie? I mean, good God. What happened in NASA? You know, they did pretty good for 75 years, I guess. That's pretty weird. Yeah, so anyway, if you're cruising through, throw a thumbs up and a subscribe and drop something in the chat. That would be great. I'm not monetized for this in any way. This is my virtual journal, and, you know, likes and subscribes are pretty great. Well, there we are. Buy and tail so far. Got about halfway through the gap. Not even close in the NQ. Yeah, about the same. What's happening over here, I wonder? This chart's not liking things here. I don't know what to do, but I'm not going to mess with it now. I'll do that later. After the close. We're still holding up with that volume. Disappointing here, but hey, I'm pleased with myself for, you know, following the process. This very definitely did not qualify as a IB continuation trade or any form of it. Now, can you squint and make it anything you want? Of course. But it doesn't have the criteria that I have pre-identified that was important to me. Do I need to change that criteria? That's certainly not anything that you think about or that you do. I think it's a really bad idea to change your trade plan in the middle of a trading day of a live session. If I think that this is some sort of a gizmo over here that I want to, you know, some sort of setup that I think is valid, which I don't, but just use it as an example. The time to think about that is not now, not during the trading session, in my opinion. Had we gone down here, traded up, come back through it? Yeah, absolutely. So we're 28C, we're at 11:11:01. Well, in a minute it'll be 11:11:11. Right now, 11:11:11. There you go. It's the 2nd of September 2025. Central Standard Time. I think I might have forgotten that in the pre-market. All the times on my charts and that I speak of, and there's here on my computers is Central Standard Time. How the hell? I could not have that. Yeah. Yeah. Hey, Richard. What's up? Quite the big gap today, huh? And the IB continuation trade didn't amount to a hill of beans. Now maybe we'll get a trigger here, I don't know, but it's getting kind of late for me to be looking at that. Even with 3 distributions to the downside, we just blew right through it here, and no qualifying parameters for that, for the continuation entry. What did get down to 10 handles, which is pretty snazzy. I mean, if you took it, but not for me. I think a situation like this where we trade down and back up again, I have to really give my head a scratch on this one. When there's so much time between signals, it kind of, I start to think, well, okay, they wanted to get lower and they realized there wasn't any more action down there, so now they're going to start looking higher. I think that's kind of the same idea as how long do you wait before an IB can, a migrating VPOC turns into diddling in the middle. And that's kind of the same thing here. For an IB continuation trade, to me, we trade through it, back up here, test it, and down we go. Now after, almost an hour, well, let's see, what is it? 35 to, yeah, almost an hour, 45 minutes for sure. Have they exhausted have they discovered there's no more selling down here to be had or buying to be had, and they're going to test up here? I kind of hesitate. I would hesitate to take an IB continuation at this point. And that's, to be honest with you, something I hadn't really thought a lot about before. But it's definitely real. In this kind of a day, who the hell knows? We've got 3 major distributions, or 4 if you want to be. If you look at over here on the book map, we got 1, 2, 3, 4 distributions. Maybe getting to be 5. 1, 2, 3 pretty much over here on IRT. I mean, obviously they're the same volume profile. It's just a visual impact of them. And are we having just a pullback and, sell the pullbacks? Ugh. The joy of trading. They sure fell. The market sure went quiet quick. Popped through this IB and then they just went quiet. Big low volume node right there at the IB low. In today's profile. This is an iceberg, and it hasn't traded because this line means it's still waiting. On a shorter time frame, what have you got? Higher lows and higher highs. Obviously, on the bigger time frame, you got lower highs and lower lows. That's the way the market goes. Always a contradiction depending on how you're looking at it. Now we're at one point. So a short right at the IB low isn't scaled till you're down here in the icebergs. Got 135 contracts living down here, and we've got a lot of selling piled up above us. Some larger volume, larger liquidity, pretty evenly spaced out down here, about every 3 handles apart. Whatever that means. I don't find this to be a let's say an A+ setup where I would think it's a good environment to put risk on at this point. And of course, coming into the noon hour, who the hell knows? A lot of times they will reverse the price. Having explored lower and found not to be a hell of a lot more interest down there. This iceberg keeps loading up. I think I may be not remembering correctly, but it's now $1.60 at 6. They'll probably trade into that. There they go. And now they're loading it. You see how it's stacking? Now it was up to 300 and change. 315 was $1.60. So that iceberg just keeps reloading. And they took them out. They accumulated all that. Remember, that's buying. The volume dots here on my book map are delta. I never look at this thing up here, but this is the order book volume. They're just about flat matched, which, you know, makes sense, I guess. Well, if you were a real fast trader and somehow convinced that there you go, they got through that order and now they're taking it lower. So now you got scaled and you're a happy guy or gal or person. I suppose in hindsight, I could say that, you know, this could be a misvetted trade in that we did trade up through the level didn't get anywhere, tested back up to the bottom of it, and then the only thing you've achieved so far, would have achieved so far, is a scale, which is absolutely not the goal. The goal is the profit target. The only person that makes money with scratches is whoever's getting the commission. If you're trading in a brokerage. So that's got a V bottom here now. Does that mean we're going to trade up? Who knows? Disappointing day for me. Disappointing view. Oh, mama. So now, brown cow. The further towards 12 we get and into the RTH2, the less conducive it is to take these IB continuation trade signals, I believe. Just thinking out loud here. Thinking about it on the big picture, what happened here? Well, big gap low. We tried to get up higher. We couldn't close the gap. Absolutely no interest. Fell off. Tried it again. Didn't get anywhere. Okay, let's go look the other side. Boom, down they came. Took the IB low out. Get down here and a bunch of tries to get lower. And nothing happened yet. Now back to test the IB. Maybe this is going to be confirmation that we're going to trade lower. That would be in, support of the risk or the gap rules understanding, which is if we close the gap relatively early in this trading session, and if price is accepted within the previous range or previous value, we are likely to trade up there, and perhaps if it's accepted in value, trade all the way across that value. If it's not, if we cannot do that, the theory is that we will trade in the direction of the gap, which essentially we have done to here so far. It seems to me like they kind of ran out of gas down here. That doesn't certainly mean anything, but that's just me thinking out loud. Now there's another trade setup, more particularly in static, anywhere else that I know of, called the bar trade, which is breakout and retest. I guess fairly well known. So here's a consolidation, breakout, retest, breakout, retest, breakout, retest. Uh-oh, let's try up here, breakout, retest. What does that mean? I don't know. I'm just... it is not a setup or condition that I have identified. and am trying to vet or have vetted. But, and I guess I'm disappointed. I'm definitely disappointed that this kind of thing didn't happen over here. Then I would have been much more warm and have a much more warm and fuzzy feeling about getting short with the IB continuation. This part down here bothers me. I'm trying to look for some other kind of, well, I don't have to look too far. Let's look at the micro composite. Here's today. What have we done? Well, looky here. Boom, 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 boom. All the way across this level, you know, for weeks. Back to the July. Well, what is this here? Let's say July 3rd. This is, well, that's maybe not. So here, July 15th, pretty much been a level that somebody cared about. Support becomes resistance, resistance becomes support. I guess all that stuff matters and is really the truth. I always think about those things and I wonder, who is it that is still sitting there? Why would, you know, somebody back 2 months ago, are they still defending this level? Why would that be the case? Other than they're just, you know, on crack and expect this thing's going to go up, you know, for the rest of their life. And if you're, you know, again, if you zoom out, it's all time frame dependent, yeah. Look over here. Let's just look over here. Okay, in April, come on. Let's pretend. There's April. There's the April lows. You got long in April. You're a goddamn rock star, right? What is it? What are these levels down here? This is 49. Let's say 5,000. 5,000. 6,000. 61. 62. 63. 64. 65. 100 points up here. Now, you certainly can't, that is certainly not day trading. You know, your rollover costs would be, you gotta better have yourself a big account if you're gonna be able to, you know, carry over that carry margin, which that's the way it works. And if you go back even further than that, I mean, here's something pretty funny I noticed. Right here in my own little world. If you look at, oh baby, no, come on. If you look at the thumbnail for the upcoming stream, the ES is trading in the 4,000s. Way back when. We got way up above it, and then we sold off on April into the 4,000s and back up we went again. But, you know, it's, and if you look at it even further back, you're down in the 1s and 2s. Essentially, the ES, or the American stock market, pretty much over the long haul goes up and to the right. What? And here we are. So if you took this short, this IB continuation, hopefully you got scaled. And now where are you? And this is where Bookmap can trips me up with perspective. Got to keep making sure I've got the scale right. Once again, IB continuation short. You're scaled. Where are you going? Now, unlike previously in the last week or few weeks, I should say, of trading when I didn't trade any trades, there's no range requirement problems, really. So conceivably you can get through this, and you got some liquidity down here acting like a magnet, assuming that you think that's what that does, rather than a floor or a lid. And if you want to look at it a little, you want to zoom in a little, what do you have? Here's a consolidation, there's a breakout and a retest, there's a breakout and a retest, there's a breakout and a retest.
Sientas dolor, quiero acompañarte hasta que te salga el sol, besar todas tus lágrimas y darte todo mi amor. Cada día por amor, corazón, todo lo que viví fue para prepararme y reconocer tu amor, amor. Sientas dolor, quiero acompañarte hasta que te salga el sol. besar todas tus lágrimas y darte todo mi amor.
Now you see the benefit of having those migrating VPOC flags when we're zoomed in like this for scale and possible trading, anticipating perhaps trading. You can see just where we've been as far as POC is concerned. Ooh, look at there. What is this for? Who the hell knows? One thing that may start to happen here, we may start repairing this. They call it repairing, I don't know. Pick a word you like. Here's a big low volume area, right? Filling it in by trading around it. What do you call it? There's a big sharp V reversal. That's so you got short at 87, and there's 83, and there's your scale, and what are you gonna do? For chewing in your ear, I thought I was on mute. I'm enjoying my breakfast. Notice we just poked our nose right back up here into the overnight low. And that didn't seem to have much interest for anybody. So I don't know what to think about this. In my mind, after this period of time, the IB continuation or, whatever trades are kind of over with. I got to give that some serious thought. If there's a time parameter on that. This being one, right? But this would have been suggestive of an IB failure. And once again, we didn't even slow down. We just went blowing through it. Obviously, great trade. There's, several points there. Not great trade, but you know what I mean. Right in the middle of this big consolidation. It's frustrating. I need to be at a spot. My goal here with the back testing is to be at a position or a place where I eat my own dog food. And if you loop back to that conversation about trading as a business of statistics and probabilities, not just, gambling or adrenaline rush. What I say there and what I believe is that after you've identified statistically a setup and that it is outside of random distribution and it does have a positive expectancy and a positive edge, then you take the damn thing every time it shows up and you rely on that. Now that's what Rod is doing with the IB failure, apparently. And that's what you have to do, I believe, which is essentially, think about it, that's what an algorithm does. An algorithm doesn't have discretional anything. It's based on a set of rules coded by somebody. Or, and up to now, somebody, maybe at some point it'll be something, but and there's no discretion in it. When rule A, B, and C are true, then boom, then B, D, then you enter. And that's the way I need to get. And I'm not at this point. And I have recognized, which I mentioned before, that I have realized recently, and even with the successful trades, which I have a lot of now, too infrequent of trading, I believe, but those trades have been successful, that I realize the final entry decision is discretionary. And, that's not good, I don't believe. Or at least it's not in line with my thinking and my philosophy and my strategy. Now, maybe I need to rethink that or something. I don't know. I know from a, peace of mind point of view, I would like to be definitely trading a statistically proven setup, and that's what everybody says you need to do, so I believe that's the case. Now we've had another VPOC migration lower. Do you see that? I can't really hit it because it's right at the overnight low. I guess I could. Wait a minute here. wonder if I could do that. No, that wouldn't work. What is this now? We've had a... I'll scoot that up in a minute. Like this. This is our VPOC migration idea I was talking about. Okay, 2 minutes till the witching hour. And here's the world famous VPOC migration trade. And this is a precise, exact example of why I'm not even really interested in trying to vet them, because I have enough experience watching them and trading them to know that this frequently happens. And you could get into some sort of criteria like the migration has to be so many points, or the retest. Now, one of the things that we're doing in the IB failure trade, which Rod graciously shared his backtesting stuff with, it says succinctly that obviously the statistic is taken out. High or low. Here we go. The statistic is taken out. Then price trades. Now this is the IB failure, meaning that once the IB low is taken out, the trade is taken back in the direction of the back into the IB, into the range, right? So it's taken out. At some point, it trades back up through 3 to 5 points, and then it retraces back to the IB low, in this case, plus or minus 1 point, and that's the entry. And that's what I worked all weekend until I was completely burned to a crisp to program it or to code up for IRT, and haven't made yet. Really disappointing, but true. Disappointing, but true. And I want to. Trying to get the I don't know what happened to it. I thought I had a snap of it, but I guess I don't. Could have sworn I did, but anyway. Yeah, what happened. Let's see here. Object Manager, I think is what it's called. Object Manager. Trading System. IB F2. God damn it. So here's how this works. This is the target chart. If you're going to push it to a chart, you come up with a system definition. In this case, it's the IB failure version 2. And what I'm looking to code up is exactly what I said. Now, the first steps of this that I developed long ago is the main, which is just set some flags, conditions, how many entries you have. And then I have, unlike multi-brackets in Bookmap, when you code something, at least in IRT, you need to do both a long and a short. And these are end of day. So with Bookmap, if you enter a multi-bracket, you put the stop, you put the targets, and it's smart enough to know which way you've traded, short or long. Anyway, so that's the way this works. So that's what these are all about, these first bunch. Then what can change over each one of these different types or different trade strategies is the entry type, because that's pretty much the part, right? So for example, these are the steps of the entry, and I've tried different ways of doing this. I've tried doing them in breakout steps like this, which is, I think, the preferred way, or single line, which is how I've used it before. And so what does this say? If this is where we've taken out the IB high, because this is an IB high short. So if you're gonna trade this strategy, you're gonna go short from the IB high, because it's a mean reversion, right? Failure. If you're gonna go short from the IB high, or you're gonna go long from the IB low. So you need to take out the IB high first, and then then if you do so, you change this user variable to 1, so reset that. If it's 1, meaning this has been done, and IB1 is 0, meaning we haven't satisfied this step yet. We trade back into below, the close is below the IB high. I see a problem right there. It closes below the IB high, less than IB high minus 12. That's wrong. Should be more than IB high minus 12. Shouldn't it? And the close is less than the IB high minus 20. What do those mean? 12 ticks is 3 points, and 20 ticks is 5 points. If that is the case, then it sets a V-pound 81 to 1. And I'm going to save this before anyway. And then the next step, if 81 is 1 and 82 is 0, is the close less than IB high minus 4? It should be more than IB high minus 4, and less than IB high plus 4. What does that mean? It means it's within 4 ticks or 1 point either side of the IB high, right there. If so, then it sets the IB 82 to 1. Then if that's the case, and 83 is 0, we set 83 to 1, and we set entry T1, T2, stop, and a flag that we're in a trade with 2 lots, and a position. And then if 83 is 1, and we have these are position things that I set for 60 minutes, which is the first IB, and this is another one to cut it off for the RTH 1, 2, or 3. And if that's the case, then it's a trade. It's a short, supposed to be. And we modify the rule, and we save the rule, And then we can do two things. We can set up a back test. Just put a couple days in there. Okay. And we can back test it, which goes like this. Boom. Now there's no long trade. I can tell you that right now because that's a problem. So we made $4,550. And how did that work? It looked back over. Took 1 second to run the back test. There were 10 trades. It took 40 shares because there's 10 trades and there's 2 in and 2 out. That's 40. Here's the rest of the parameters. And we have what's real important to me, which is wrong because the largest winning trade should only be $750 because that's what both targets in the risk neutral 2-lock package are. And there should be a maximum largest losing trade of only 300 if we'd have taken a stop. And then we go over here, and this is the part where you can really get into it. You can see what the exact trades are. So there's the 29th and the 2nd. And you see that they're all shorts, which is wrong. Scratch, target, but wait. No, that's wrong. Something's wrong there. This should, no, that's exactly right. That's $750. So that should be the largest trade. Scratch, scratch. Target proper. This is wrong because this happened in the overnight thing, which is not right. That's why this went up $200. I gotta fix that. I gotta figure out why this does that. And then target, scratch. So now the next thing you can do, which is kind of handy, is you can send it to the chart, which looks like this. Ah, shit. I meant to do something else. But anyway, so there's a string of them. And that's how it plots them, I should say. And it's just not working right for me, right? What's going on here? IRT is not doing well. And I don't know why, and it's really frustrating. Because obviously I rely on it a lot. There's plus 48. Is that right? No, it's not right. So this is completely wrong. Well, hold it. This is completely wrong, I believe. Anyway, you get the point. So this is what I've been struggling with all weekend. And disappointingly so. Oh, I know what's wrong. Goddamn thing there. There you go. I want to get that. I want to open this thing. Well, okay. I can't seem to do anything I want to do here now. There we go. I want to get rid of this and get rid of that. Go apply. So now that's supposed to be an IB short trade. And it's wrong. There's the IB high, so that's not working right. So there you go. Now I have others that do work much better. The IB continuation, etc. But this is trying to specifically code this up so that it does these steps of confirmations. And that's what I spent my weekend struggling with, and why I have a headache and my eyes are crossed, and a bunch of crap. Hey, Panda, hey, baby. Needless to say, if anybody within earshot here knows how to do that kind of stuff better than I do, speak up. That would be great. And unfortunately, for years, I didn't approach trading this way, which is, I believe, the correct and more long-term, lasting, consistently profitable way to do it. And then I see all these guys that are just, they're trading on, they have no indicators, they have no volume, they have no volume profile, they have none of these levels. They have a bar or candlestick chart or two, and they're trading on, whatever, TopStep X or Trading View or something like that. And they're making money hand over fist. There's no right or wrong way to do this. There is the way that works for you. And I'm hopeful that I'm on the right path that works for me, but I'm all ears for alternative solutions. And I sometimes wonder if it's not just better to just quit this crap and fire up TopStep X or whatever else it is and just think, okay, I'm going to start looking at some, areas that I look to me like support and resistance that I was pointing out earlier, with, what happened across here, and, how did that work? That's what some of the Dakota or whatever, those guys, and they make lots of money. For example, I don't know about other places. I'm sure there are many similar examples in most of the other prop shops. Or now, in our case, trading this way with people that I know are real, this is kind of the methodology and the setups that is really working great for Rod, for example, or other people there. There's probably not correct to say names or whatever else, but you know what I mean. That's and that's really inspiring in a way, and then frustrating in a way that you're not doing the same thing. I should say that I am not doing the same thing. And here, look at this VPOC migration. Huh? Yeah. Okay, I'm going to step away for the half-day break here for a little bit and run through the shower and a couple things, and then I'll be back. Got to keep music in for a while.
Salgo a caminar al sol por nuestro lago, y por donde mire te veo en todos lados. Tantos recuerdos, cuánto hemos pasado. Nuestro universo todo era posible. Cantamos, reímos, bailamos y lloramos. Nuestra amistad nos hacía invencibles. Siento tu presencia cada día, toda tu luz, tu magia y energía, para siempre serás parte de mi vida. Ay, amiga, cómo te extraño.
I'm just looking at different back testing things here. This is how it should look, right? There's T1, T2, entry. There's a long T1 stop. I don't see any long. I don't see any continuing longs here. That's interesting. Why that did that, I got no idea. I think this whole thing is goofy. So let's set up the back test. What do we got? Look at 20 days. This is the IB continuation. Back test. It's pretty pathetic for 20 days, huh? So there's 23 trades, there's 11 long and 12 short. Net profit per day, terrible. This is not the trade to be doing. But this is good. So it's 26% profitable. And that would be the win rate, which is a ridiculous data point that you should never hang your hat on, taken by itself. And there's the maximum win and the maximum loss. That part's good and that part's correct. That's what I expect with the setup. And this would be then the trades. So there's a short to both targets. There's a long to full stop. There's a long to both targets. Short to both targets. Full stop. Full stop. Full stop. Full stop. And how you can look at that then is, okay, we were kicking ass and taking names here in this on August 6th. 7th, not so good. 8th, stop. 11th, full stops. 12th, oh, and one of the things here is that I have it closing out after RTH 1. So that's how it works. The problem I'm having, obviously, is I want to be able to, the way the trade rules for this particular IB continuation are written is this way, which is one line. I've tried doing similar with Rod's thing. This is similar. The high is less than the IB low, or what is this? This is a short entry. Because this is continuation, right? So this is going to be going from here down. So it's higher than or equal to the low, and the high one bar back is greater than the low. This is the position where it's 60 minutes after the open and 300 minutes before the close. And then I just set these things up here, so it's got the minimum amount of criteria, only those two things. And if you push this to the chart, and get rid of this thing and this thing, I think. That's what you have. And that's how it would look. So, there you go. And I'm going to be through with that for the day. Get that off of here, because I think seems to, IRT either doesn't seem to like it or it's got some problem. I have the feeling that it's working on this continually, so I don't want that to be the case in the live session. And I have to be sure that I don't let myself get fixated on this and focus on other stuff I have to do. That's, you know, part of real life. Ooh, look at us go. Well, that IB failure didn't, or continuation trade didn't work out so good for anybody, did it? Now, neither did the IB failure, actually, because there's these would have been IB failure ideas. Immediately stopped out right here, and then on up they went. So, yeah. Oh, sorry, wrong window. The failure, or the continuation crapped out, and you're stopped. Maybe you got a continuation here and you got scaled, then you're stopped. Here's a failure, here's a the failure, the IBF. And so let's see. Well, it doesn't meet any of the criteria from Rod either. Because what that says is that we trade down to it, trade through it, back up to within 3 to 4 points, come back down to it when we take within 1 point either way, and then we take the failure. So, you know, if you figure that out, you be sure and let me know right away. It's like Tom says. He says a lot of pretty funny things, and some others in there too. But you know, you can't predict where the market's going. No one can. You can anticipate, you can narrate, but if you happen to figure out how to predict where the market's going, you just be sure and call me first. And that's exactly right. All right, I'm gonna now hit the shower and please the cats and the family and be back pretty quick.
And look who's coming up, the IB high. Amazing. Well, what happened? Nothing. Okay. Cool. A pretty boring day for me, that's for sure. But I don't feel bad about not over trading or not taking trades that are not in my clip. It makes for boring streaming, that's for sure. And imagine how I feel standing here all day from 6 in the morning till at least 3 when the stream closes down, and then I'm here till 6 or 7 or 8, doing whatever, 9 sometimes. So 12, 13, 14 hours standing here. These are stand-up desks, and when I say standing here, I mean it literally. No chairs in here. And what do we got going on? Excuse me. Well, there you are. Oh, and Captain Marvel. Oh no, he's already announced the Space Force. Now he's going to move the Space Force headquarters from Cheyenne Mountain, where it has been forever, to Alabama somewhere. I guess he needs to have some, well, I don't know this, but I'm pretty sure that Alabama must be a red state. I guess that's what it takes. And we are in power hour. What a truly boring development here. What happened in the news? Let's go around the park here and see what happened. Well, we pretty much built it out to a rotational day. It's just a TLab snap, but it gives you a good overview back many days. It's full session, so there's ETH, RTH, ETH, etc. Statistics. What happened in the news? Well, Apple didn't like that. Imagine what that guy got paid. Holy crap. Drugs and other things are coming from Venezuela. So that's his new thing to do. He's interviewed on a radio show. Wow. So he goes on somebody's radio show, whoever Scott Jennings is. Huh. I don't know who that guy is. Well, not that it matters. No, it would not be a disaster. Yeah, tariffs are an economic disaster. I think that's pretty much what everybody thinks. But I guess not. And has anything, I wonder if anybody is monitoring any of the stuff, you know, progress. Is it worse? Is it better? I don't know. That's the thing that happens. It seems like everything is for an immediate headline and then whoop, all quiet. Nobody talks about the billions of dollars a day it's costing the federal government to fly to all these deportation flights. $1 billion a day to pay to have the deported people in Costa Rica or wherever. We're paying that guy, not Costa Rica, but El Salvador. How much does it cost for all this, the National Guard in our cities? This is all just posturing, I think, for some sort of a overthrow of the democracy. I don't know. It's really weird. I don't know what the hell is up. But it is certainly not normal. I mean, here's the President of the United States making federal policy decisions on some guy's radio show instead of a press briefing. I thought it was supposed to be an announcement. I don't know what happened to that. Maybe it was here. I guess here was the announcement, and then apparently after that he changes it to be changes it to a radio show, I guess. I don't know. Pretty weird. Pretty weird times we live in, that's for sure. Makes me want to just, keep my head down and do the best I can. What is, of course, the problem is how this continual drama keeps the market upset. Does this look like normal market behavior? Or here? Not really. That's the part that's too bad. And these are rather crazy, How many $1 billion will it cost? I mean, stop and think about the infrastructure that's in place in Cheyenne Mountain and has been for 50 years or more. And it just, on the whim of whatever, which I'm sure is voter based, it's going to be moved somewhere else. How many billions of dollars will that cost, or disadvantage to us strategically? I don't know. To the U.S., I really don't know. Those are the questions I always ask, and then I don't ever see those questions being asked or answered. Anywhere. Anyway, quarter after the big power hour debut. Let's see what they do. Okay, so another completely and totally boring day. But it's to be expected, you know, on a day back after holiday. Not unusual at all. Another 8 minutes till the big final curve. We round the corner for the home stretch. Quite a day though. If you weren't trying to, we opened the day with gap rules in play. Big gap, 80 points, I think. Closed about half of it up here. Or a bit or more, about half, and then we're just rotating back and forth. It's a big week for news. They just, you know, brought it back to a little bit of reality. It's a big week for news. We have several different reports this week, all market movers. And here we are back at a price check at L3 again. It's pretty crazy, isn't it? How they flop back and forth. It was a rotational day. And now they're building this out. You see, it was at 1.1, 2, 3, 4, 5, 6, 7, 8 or so distributions. Now they're just going to keep rotating it back. They're going to run out of day to do it now, but they're getting it back to where it's more or less a rotational day. A little less excess on the bottom than the top, which is kind of suggests an unfinished auction down there. But yeah, basically a pretty orderly auction. Compared to what those yahoos in the overnight did, you know, the Englishman, they just leaped out the window. Well, if you had to guess, there's some resistance or support right there, huh? IB, the value area high, and all these guys across here. All right, so now we're rounded that corner. There's our range. The blue line is my visual reference here so that I can just glance left and make sure I've got the full session in range, in view. Here's what I'm talking about. Look at those level, that level right there. Right at the developing value area high. If they take out the IB high now, that's about a 35% probability of taking both. Let's check. Hello, there we go. 31.4% probability. We take them both at neutral day. The other way to look at that, and I know some people, actually FT71, Murad Askar, has an opinion that that statistic means if we're trading up here like this somewhere, he finds it justifiable to consider that a mean reversion back to the center outside in, because there's only a 31% probability you're going to get this one. So what does that mean? That means you've got a 69% probability that you're not. Going to take both, if I'm correct. I'm pretty sure that I am. There's a 97% that you're going to get one or the other. We have gotten one. Now that we've gotten one, there's only a 60 or 31% chance we'll take the other. Meaning that after this statistic has been satisfied, we have a 69% probability that we will not take out this other side. And remember that this over here, if you happen to be looking at this, is not part of the statistic because this is before 9:30. And then remember that the statistic is only in action or only valid after 9:30. Okay, so let's market wrap. Oh, what's that? That's this one here. All right, here's the daily wrap up. Well, after a gigantic sell off from the holiday and a big gap down, we're basically rotational today. There's our gap. We got about half of it back. And we remain. This was, this was Friday. Remember? Because I scrubbed the holidays. So Sunday night and Monday morning are scrubbed. And then this started, of course, there's no data for Monday afternoon. And then this starts at 1700 last night. That's when our ETH opened. So there we have it. And here's what our day looks like so far. No real indication to try to close the gap. They took a look up there and sold it off pretty hard, and then it didn't seem like a whole lot of interest to go any lower, and they turned it right around here when we discussed about that. The news here, this is the financial juice. Both of these services are free. You can certainly pay for them all you want, but they're free. This piece is free. There's the schedule, which is pretty much the same as Investor RT. Not Investor RT. What, Panda? Investing.com. Then this is more of a squawk box thing. What? And what's wrong with her? Stand by. I guess she doesn't know what she wants either. All right, so this is pretty important now. We have tomorrow we got factory orders, Jolts, FOMC speaker, and the beige book. Those are both market movers. Might be better to just look at the rest of the week. This is one of the reasons I like investing.com. Here's today. Here's tomorrow. Now, Thursday is going to be a biggie. Continuing jobless claims, initials, S&P PMI, ISM PMI, and then, of course, not to be outdone by non-farm payrolls on Friday. I'm real curious to see if this new whatever he's called, the BLS guy that Trump put in after he summarily fired the last guy because the report was, the numbers were bad. Never mind, the numbers were bad. The guy did that he fired this new and put in a new guy. Now I'm real curious to see if what the new guy does. So there you have that. And this is investing.com. And no real earnings out this week, I don't think. Salesforce, Broadcom, not really. Okay. Let's move onward and upward here. This is our micro composite chart. It's a RTH session only, and these are daily candlesticks. Wherever price overlaps, I draw a volume profile, and that automatically then generates the high and low volume nodes, which are these red and green lines, and the micro composite VPOC. I'll include today after when the market closes this afternoon. Here's our market profile, the NQ, the ES, and what else we got going on here? Well, we're looking at about a 0.81 negative change. This morning it was 1.3, so they have brought it back up to, which is obviously in line with what happened here. Fairly heavy volume, 1.48 million. We have the market on close orders in 9 minutes. And here's our good friend Bookmark, well, whatever this is called, Bookmap, our good friend whose name I can't pronounce. These are the market micro composite column numbers, which I input today and keep up manually. These are the high volume and low volume node automatically pushed levels. Full session volume profile, RTH session volume profile. And this is the notes column, which I change, the stream starts every morning at 8 o'clock when I go through all of the setup, the numbers for the day, the pre-market, and input these statistics, etc. I always change the title of this column to represent or to reflect the open type for the day. And then that also dictates which column of statistics we use that apply to the corresponding price levels. And these are the price levels or session prices pushed from IRT to Bookmap. And here we go. No indicators on Bookmap or IRT. I have 2 POCs. One is the full session and one is the RTH session. POC is nothing special. It is just marks the price at which the most contracts have traded so far in the session, right here at 9,300 or whatever that says, 92.75, 10,373 contracts. Well, there's more than that right here, I guess. Have traded so far. 11,000 and change have traded up here so far in the RTH session. That's how it works. Where any one of these numbers is more than that, this is going to go there. That's all there is to it. This is the RTH session, VWAP, and the Globex VWAP, volume weighted average price, and the RTH mid. The rest of these are common sense names. You know what the IB low and IB high are. These are acronyms from the market profile days, meaning initial balance. In reality, here in what we do now, the IB high and the IB low just mark the high and the low of the first 1 hour of the RTH session. So just give a look at that for a second. Look how wide the IB is from the top of the market, hasn't been retraded today, to almost the low. So from 83 to 64 quarter. That's 40 handles wide, pretty much, on the IB. That's pretty substantial. And that's pretty much it. Now we're going to get the market on close imbalance at 50, at 1450. And then I will wind the stream off at around 1500 as I do every day. I have an idea of what I'm going to do going forward. I got to give it some thought tonight about how I'm going to approach the stream and be able to do some trading besides just sitting here doing nothing and focusing on the vetting these IB trades in the mini. So once I've got that firmly worked out in my mind and worked out that it is a proper procedure, that's what I'm going to do. And I'll go over it in the pre-market and we'll go from there. Yeah. 4 minutes and 30 seconds to the MOC imbalance. I think I mentioned this before, but the volume dots here, or the whatever you want to call them, they can be 3D and they're kind of slick looking, but I figure that's taking additional processing power that I don't need to be spending on graphic, on something silly like that. They are colored by delta. There's obviously both buying and selling at every level because that's how contracts, that's how the futures works. And in this case, this is colored by the delta aggressor. Who made more ground? Again, there's no ever such thing. What, Panda? What's the matter? Hold on, we got to see what she's up to. Well, there goes the neutral day. So 31% of the days, that will happen. And I don't think it's actually happened yet officially, but pretty close. That's pretty funny. Now it would be really funny if they got a squeeze going here. That was on the market on close orders. Imbalance. So that's right here. They're the market. Whoa, look at this. My. 3,322,000,000 S&P 500 buy side imbalance. 1,373 buy side imbalance Nasdaq 100. 1,132,000,000 buy side Dow, and the Mag 7 881,000,000 all buy side. Wow, that's amazing. That's pretty incredible. Hmm. I don't know whether this is. It looks to me like it actually touched it. So I'm going with yes. That's what happened. And the way to tell that is the 6425 is the IB high, and 6500 is the high of that bar. So it took it out by a tick. Oh, sorry about that. IB high 64 a quarter. Watch the info here. That bar is 6,500. So, and now it could continue to go higher as it's apparently going to do. So now there's no question, but that's the way I do it. What are you doing over here now, mister? Come on, don't be so weird. If I hadn't built this machine myself, which I always build my trading machines, and know what was in it, I would be amazed. It seems like some light little fluffy puff thing. I'm not sure what to do. Well, there's a neutral day. Merry Christmas. Yeah, there you are. And we are now 1456. I don't think there's going to be any hope of a. No, you never know. Market on close. Closing swing trade to push this, just put the squeeze on them. Who the hell knows? Who the hell knows? I certainly won't be working on that, and I'm certainly not going to try to trade the IB continuation. I will be trying to get my coding to work again tonight, but I've got some important things I have to do also. So I've got to start taking care of the rest of my world, devoting more attention or, compartmentalizing my efforts. This takes a lot of the day. It takes a lot of time. Two minutes. Well, okay. 2 minutes and 2 minutes. Now it's 1 minute and 50 seconds. And in comes the liquidity. Will they figure out something to do with it? Let's see here. Do we have any gigantus? Here's 468 down here at 6,400. What they think is going to happen down there, I don't know. Got 350 up here at 27.5. That will probably trade. And another 315 up just above it. So liquidity's piling in here. All those big 3,332 something million contracts in balance. I don't know what the hell that means or how they do it, to be honest with you. Obviously, we don't see billions of contracts trading out right here. So I don't know how that, I've got to do some homework on that. I just get so bogged down on this backtesting stuff because I think it's so important that to my progress that I get sidewashed pretty easy. This weekend was painful, boy. Struggled and struggled and struggled and still didn't get anywhere. Goddamn frustrating, I'll tell you. I even tried Chat GPT and using that for help with the code, and what they said was perfect. Here you go. This is even for the version and of Investor RT, and it comes back with yes, and here's the exact code for Investor RT version 15 point whatever I said, whatever it is, I forget. And it wouldn't work. I mean, it wouldn't accept it. The code error here and error there and error somewhere else. So that's indicative of how great Chat GPT and all this IA crap is. That's not very encouraging. I even, to the exact build here. Didn't matter. It didn't matter. Didn't work. And unfortunately now at IRT, there's not a real go-to source, support source there anymore. Chad Payne was fantastic. Bill doesn't have anything to do with it much. I mean, he will answer some things sometimes, but you can sort of tell it's like annoying him. Eddie, I went back and forth and up and down with him for quite a while, and he said, well, you really can't set it up to trade and back test multiple targets and stops and all that kind of thing. And I kept going, and I very definitely have been doing that perfectly without problem. But so I, question whether that's the place to go for more. Am I going to get the same? Oh, and he didn't have time to work on it, was something else he said. So, and okay, but unfortunately, I don't know of an alternative. That used to be the super advantage to IRT, was their support, was Chad. And here we are. The 1500 is over with. Yay, over with. We went neutral. Do something good for yourself. Get away from the screens. Do something for your health. Exercise. Get your blood going. I've got to get my thinking cap on and get going for school and taking the daughter around to school and whatnot else. So the school run for college now. Wow. There you are. Have a great night. I'll be back at 0800 tomorrow morning. Jesus, no 700 with the pre-market. So have a great one.